Hello again, everyone. In this technical analysis of the stock market video, I call it struggling to hang on, because that is exactly what's going on with the market right now. There's a battle between the bulls and the bears, and they're really struggling to stay up here. The Dow Industrials is struggling to stay at this level. The Nasdaq 100 clearly broke down. The S&P 500 looks like it may be starting to break down. We're going to focus on the S&P 500 this week. We'll touch on the weekly charts of the Dow Industrials and the QQQ, and then look at one of my indicators, look at Bitcoin, and check in on Tesla. All right, let's take a look at the Dow. The Dow was actually up 564 points for the week. And you can see after the big week down last week, here we are back up, almost the opposite type picture, literally like a seesaw going on. And when you look at the daily chart, clearly the previous week, the bears won Thursday and Friday. Here the bulls come back in on Monday. The bears win Tuesday, Wednesday, Thursday, and the bulls fight back on Friday with that great jobs report that had twice as many jobs created as what was expected on average on Wall Street. So, we'll see where we go from here. I mean, there is some damage being done. Let's take a quick look at what happened on the Qs. Now, here's the picture on the NASDAQ 100, down 5.46 for the week. And, it's the same kind of thing with the daily, except it's weaker. Look how much damage is going on here with the Qs. Okay, and when you look at the weekly chart, and we focused on the NASDAQ 100 last week. But on the weekly chart, the thing that really I notice in here, this is the 10-week moving average, the blue line. We got two consecutive closes below that 10-week moving average for the first time since a year ago. Okay, we didn't in the sell-off. I don't believe this happened. Now, let me step back for a second before I go off and say that. Let me double check this right here. Closed 270.45. Yeah, we're slightly above the 10-week. So visually, it just looked like we weren't, and this is slightly above. So we'll see what kind of follow through we get, see what kind of damage. Clearly, the bulls came back and won the day on Friday. We'll see if there's any kind of continuation or not. The short-term trends have turned down on the NASDAQ 100. Now let's talk about the S&P 500. Well, the S&P 500 was up 30.79 for the week. So kind of a pause type week, clearly a little doji candle in here. Both of these hanging right above the 10-week moving average after that negative week the previous week. Let's look at the daily chart. You can see how the bulls came back and won on Friday, up 73.47. The Elliott wave picture, when I drill in and look at this, this is my wave count right now. I think that we had a first wave one. I'm going to focus on the move down from the high of February 16th. Okay, I think that we had a wave one down, well, wave two back, and I think what we're trying to do is flush out the 5 waves within the third minute wave. And I've got it labeled as a minute wave right now. I mean, we'll see how big the waves end up actually being. We could actually change the degree in here, but I'm going to just stick with that for the moment. So let's look in and just take a look at what we're talking about in that move down from the 16th. Here is what I'm talking about here. The first wave looks like a broadening leading diagonal pattern to me. A lot of crazy volatility was going on. And we had this nice zigzag deep retracement for wave 2. And now as we come down in here from the high on March 1st, I think we had 5 waves that occurred down into the low on Thursday in the middle of the day. Got this reversal candle, and now it looks like we've pulled back into a wave 2 in here. Now when I look at this wave 2, based on the kind of wave structure, it doesn't matter where this is an hourly view that I'm looking at. You look at 30-minute view. This just looks like a flat to me. We've retraced deep enough in here that I think it's a flat. So I don't know. I'm looking for 5 waves in here. We've clearly retraced fairly deep, and we've gone into the previous 4th wave of 1 lower degree in here. So we'll see what we get. I'm looking at I thought I had what I'm looking for is I thought I had the retracement, and let me just do it, 2 versus 1. Okay, so we did get a little bit deeper than 61.8% of wave 1. I'm talking about this pullback as a percent of this pullback. So the target I usually have is 50 to 61.8%. We've clearly gone that deep. We're right back in here at this level at the high of the prior wave 4. So watching to see if we start to turn around. You notice how the bears looked like they tried to get a hold of that last hour, fought back and pulled it back halfway on the range of the half of the entire hour. So we're looking for this to continue. If this is truly the wave structure we've got, 5 waves down tells you the direction, and that's what I think is going on. So in terms of a path forward, I'd have to estimate, I think a normal length wave 3 in here would be down around 66.55, sorry, 36.55. So down here about 36.55 would be a target I would have, as of course we need this to start rolling over and coming down. And then this is just a path forward. These are just placeholders out here. Okay, so that's what I'm thinking when I look at the S&P 500. Let's take a look at the percent of stocks above the 50-day moving average on the New York, and I want to go to this view right here. Okay, I'm going to zoom out a little bit, show you a broader view of this. Okay, so you can see what happened last year as we got this midpoint right here, the 50% level. When it smashed through that in March of last year, we've come down to it after trading way above it. Come down to it in July of 2020. You broke down through it in September. You came back down through it again in October. So here we are. We haven't closed below it, but we took a shot at it on Thursday and Friday. We'll see if we get any kind of continuation in here. Watching to see we get a close down below 50. That could kind of open the door a little bit. Again, this is the percent of stocks above or below the 50-day moving average on the New York Stock Exchange. Okay, now I want to take a look at Bitcoin. Let me pull that up. Okay, here's my take on Bitcoin. And, you know, I think we're in a bullish mode. I think we're trying to work our 5 waves up in here in the 3rd primary wave, which would project to a lot higher. But I think right now we're in a corrective mode. I think we've completed 5 waves up in here in this wave 3 and watching for the corrective action in here on wave 4. And, you know, just watching to see what kind of wave structure we actually get, because you can get anywhere from a zigzag, a flat, which is a sideways type movement, a triangle, which is sideways type movement. And after getting a sharp pullback for wave 2, I'm expecting a sideways type of chop in here for wave 4. So I think we're into corrective mode. And once we complete that, I would expect us to continue to push higher in a wave 5 in here to complete 5 of 3. All right, so that's where I think we are with Bitcoin. Let's take a look at Tesla. Okay, this is a weekly chart of Tesla, and right now, clearly, Tesla is pulling back in here, and I think that we've had the 3rd cycle wave higher, and now I think we're in a 4th cycle wave and going through this correction. So, and this is, you know, well, I've talked about this before. You can search back into past videos where I talked about Tesla. I remember we talked about it after this triangle. We talked about it in this mid-year last year. But right now, I would expect that since we've gotten 5 waves complete to the upside and this 3rd wave is finished, we're looking for this 4th wave to flesh out. If I had to target it, there's a couple of ways to do it. And in number 1, you can look at parallel lines in here, project from Elliott wave highs of cycle wave 1, 2, and 3. That'd be pretty deep retracement. Another way to look at it is you look at what is a retracement of cycle wave 4 as a percent of the entire cycle wave 3. Well, here's a normal retracement levels for wave 4, 23.6 and 38.2%. I don't know that we're going to go that deep, but I'm just telling you what normal retracements are for a wave 4. Another target, which I've identified here with a dotted line, is simply pulling back into the prior 4th wave. And here's where the 4th wave ended, okay, at the end of this triangle right here before it broke out. And that was at 379. So if I had to put a target on where I think this may eventually bottom for a wave 4, cycle wave 4, I'd have to say 379. We'll see if it pulls back that far. It's already given up, nice little chunk. So that's my take on Tesla, and we'll continue to monitor it. And if you found like this video was helpful, give it the thumbs up. If you're not a YouTube subscriber to the channel, hit that little subscriber button down below. And if you'd like to have more of this kind of information on a daily basis, head on over to joehenches.net. Check out the website and check out the membership. Everyone, have a great rest of the weekend. We'll talk to you on the next video.